Hello.
Hello, hello. Good morning.
Hello.
So I think we should start, right? There are some people still joining, but super exciting to be here.
Yes.
Yeah, let's start with a quick round of intro. And Alex, let's call you Ziloy, right? It's easy because there are two Alex in the call. But maybe if you give a quick intro and then talk a little bit about what you're doing at District and the vision, and then we take from there.
Sure. Sounds good. Well, I'm Alexander Zella. I'm the founder and the CEO of District, and I've been in the crypto space for almost like 10 years now. So essentially, what we're building is we're building democratized access to hard money lending on chain. So we're one of the first people to take hard money lending and put it on the blockchain. We're launching on mainnet, and our whole vault infrastructure system is built by Centrifuge. It's going to be built on the new ERC 7540 platform, and we're going to be able to take stablecoins, convert it to cash, and then deploy it to opportunities in the US. It's all senior secured backed lending, full 50 to 70% LTV collateralized, and we have a massive lending syndicate since 1995 with a little bit under $1 billion that's been originating loans. And yeah, we're just happy to be here in the space and to make partnerships and to expand on a global level and take it from the US worldwide. So thank you very much for having us, and happy to dig deep into everything and dive into the intricacies and see how we can have synergies with our platforms and answer any questions from anybody. So
Yeah, I think I can jump, and then Alex, please complement, because you've been in crypto for 10 years now, similar to me, a
yeah.
little bit. I have like 11 years, whatever. Alex is a bit OG than us, the other Alex from Rayls Parfing. But probably you have seen a lot of stuff in the crypto space, and I believe you were waiting for this moment where people are using the technology to bring real business on chain, right?
Exactly.
And
Yeah.
what's your view there? Because you were building something that uses, you mentioned the ERC 7540, which you've been studying a lot as a kind of yield vault to implement, a real estate backed asset, and again, tell us a little bit about this, seeing what's happening on the crypto world, a lot of innovation, and then now this innovation being brought to real business.
Yeah, so essentially, how it all started was I've had a background in the space for hard money lending for a long time with individuals we work with, between hard money lenders, bank syndicates, and a couple of the individuals in our community were actually the developers who wrote the original EIP, the proposal for the 7540. And we were putting everything together, and it kind of just clicked, and we said, wow, this is going to be revolutionary. 5 years ago I said everything was going to be tokenized between stocks, equities, loans, anything that you have in the traditional markets we're going to eventually have on the blockchain. And now we're seeing a convergence of it actually happening in real time. Most of the biggest barriers were like policy influences. We have the correct policies now, we have the correct individuals involved, the correct institutions that are preparing everything to onboard, and especially platforms like you doing the correct structure and procedure of KYC necessary to get all the capital involved. So I think it's a mixture of compliance, regulation, and people willing to allocate the capital towards the industry, and those three factors finally came together and converged to create what we have now. So I think it's the best time ever in the history of human existence for something like this to happen. I mean, like I said, we foresaw this, I would say 5 years ago or so, and we were all sitting here always trying to conceptualize how we put this together, and that this would be a reality only when all of these factors came together. And now that everything is coming together, we're kind of seeing our vision come to fruition. And it's a beautiful thing. So we have all the resources, we have the right individuals involved. Now it's about execution and delivering exactly what we want to put together. So that's kind of where I see it from my perspective.
Excellent. Yeah, really good. Yeah, that's kind of, I think everything's converging to the view we had a few years ago, right? I had the same feeling. And I believe 2026 will be the year where we're going to see, hundreds of billions of dollars on chain. And bringing real value to the economy as well. And talking about bringing real value to the economy, obviously, you are kind of connecting the companies that need the money with the investors, right? And these investors can come from all over the world. And what's the advantage you see for the the origination, the deals origination that you are doing on end, and the allocators, that because you're gonna use stable coins to allocate into the vaults, right? So what's your perspective there from a more business perspective?
Yeah, so right now, if I mentioned before, so we take the vault is USDC, so everybody can deposit USDC stablecoins, and then we take the stablecoins, swap it to US dollars, and deploy it to the businesses. So furthermore, what happens is essentially we have a syndicate of banks, title companies, hard money lenders, law firms that come together. And when certain deals are essentially like unbankable, and maybe 9 out of 10 things look good, but the last variable, the length of time or certain aspects of the company the bank doesn't like, that company could never get access to capital, get funded in a traditional sense. And when we open this up to the world and say, okay, anybody that deposits stablecoin can come in here and fund this opportunity that it's vetted by the banks, it's vetted by the title companies, brokerage, the system that we've created, this whole underwriting structure. So they are very secure deals in terms of 50 to 70% LTV. It's all, I would say, like 98% of our deals are all secured by real estate. So essentially, those individuals would never be able to get access to capital because the bank, their one shot is either a private money lender or a bank. And when those people say no, that's it. They're out of luck. So we've opened up an entire world to them in terms of getting access to capital, and they can scale their businesses accordingly. And the beautiful thing about the District platform is, so in the actual interface, you'll be able to see the actual loan contract. You'll be able to see the business name. We'll have the metadata in terms of like the actual, assets that are being put up as collateral, the location of the business. You can go online and search whoever is, borrowing the capital. So it's a very transparent product where people can see exactly when they deposit their capital, where it's going to, what business is using it, for what duration, and for what purpose. And then the business will essentially pay their interest rate back to the vault and will distribute, on the monthly basis back to the depositors. So it's a very transparent process. It opens it up, essentially opens up capital in the rest of the world to people who are getting essentially not denied, but they would never have the opportunity if, once the bank and the hard money lender says no, where are they going to get money to fund their businesses? And obviously there's a certain risk tolerance and a set of specific criteria we utilize for underwriting purposes, but it essentially all revolves around access to capital. So you're exactly correct in terms of we're opening up opportunities. Right now, it's just for US companies, and we can utilize worldwide capital for that. But I want to take this to the next level and have it, in multiple countries around the world for the same exact structure. We just have to deal with the legal intricacies of that and things moving forward. So,
Alex, so I'm curious about something. So you've been here in this industry for 10 years. Marcus and I are similar, 10, 11, 12 years. And, 10 years ago, people would say that crypto needs to exist separately from everything else, from the traditional financial markets. What's your view on the necessity for us to actually go and integrate these two systems, and what are the benefits for the population in general?
Yeah, so it's mostly there's a couple of variable factors, and the biggest thing is it's efficiency, privacy, and access, right? So you can never have all three. So it's, if you want to have efficiency and access, you're going to give up access to privacy. If you want more privacy, it's going to be less efficient, and access is controlled. So it's always two of the three. And before crypto existed in a realm that was separate from the financial system, and it was a very like a sub community that we had that kind of an alternative community where we wanted to create our own system because of the fact that we wanted to have essentially, like, what is DeFi? DeFi is just, we can become our own banks, right? So we wanted to create a system that's parallel to the financial world. And now I think when we look at, if people are willing to give up the privacy aspect a little bit, right? So obviously I'm a big privacy advocate, but for this specific use case, like I said, the loan contract will be very transparent. So in terms of privacy, the borrowers are okay with us taking their information and putting it on chain, because by giving up that privacy, they're getting access to capital. And then everybody feels comfortable in terms of where's their capital going. The synergies are aligned, and everything kind of flows correctly. But in that sense, I think it was inevitable to happen. I think years ago, all of us said, oh, this is, we're early, we're maybe one day it would be incredible to see Bitcoin hit 100K. It would be incredible to see all these things built on Ethereum. Now we have companies taking the S&P 500 indices and tokenizing them from equities and stocks and putting everything on chain. And it's something that we envisioned years and years ago, that we thought it could happen, and now it's actually happening. But it makes sense because it's just another integration of tools essentially that are coming to the convergence of the traditional financial system in crypto. So
and do you think
it was inevitable to happen. So
yeah, I agree with that. And do you think that looking forward, are we going to continue to have two separate systems? Would you prefer to have these two separate systems coexisting, or do you think that in the future the two of them are going to completely merge? Like, for example, everything is going to be on chain, and the kind of legacy system, I'm talking 10 years in the future.
Yeah, honestly, yeah. So originally, I always wanted everything to exist separate, because the reason I got into crypto originally was because I wanted to get away from the traditional financial system and the banks and everything. And from my thought perspective, the Fed is always going to produce capital. They're always going to keep printing money at the US Fed. And with inflation and the unlimited production of money, what assets in the world, we're always trying to find an asset that will combat that we can beat that essentially. And that was the whole premise of getting into crypto, to be kind of against that whole system. And now that it's come together, I think once the settlement layer for transactions becomes stablecoins, everything will just converge into one. And we're going to have I believe a super app system. I don't know if you guys are familiar with WeChat in China. They have everything integrated into one system where you can pay for everything. You can even have tap to pay with your palms now and everything. But everything will be integrated into one thing. You'll have a settlement layer with stablecoins. These companies right now that are borrowing capital, they will be able to just take stablecoins right into their wallets. So essentially, the whole system integrates into one, and it becomes the people that can find yield, the people that know where to find yield in the real world becomes special, because everybody and their brother will have access to stablecoins, and everybody's going to have a wallet. Everybody in the world is going to say, okay, where can I find yield? How can I utilize my wallet as a high yield savings account? And then they're going to look for opportunities or vaults for yield, for lending, for opportunities to make money, just like you put your money in a bank to get high yield savings accounts. So the whole narrative flips in terms of those people in the real world who find the assets, who find the things that are actually generating returns to bring back to the digital space. That's going to be extremely valuable. So I think that's kind of where everything is headed to, and that's the way I see it in the future. And I think we're only probably a small number of years away. Maybe about 5 years, I would say. Maybe less. I can't say. But the second that the settlement layer for banks, where you go into your account and you can just receive a stablecoin, it changes everything. I know JP Morgan just launched their stables as well, and a lot of the banks are following fold, and they're going to integrate systems like that as well. And I think it's just going to revolutionize the world. So
yeah, I agree with that. But I think there's maybe a difference between when we say crypto, we're kind of encompassing everything, right? Including maybe Bitcoin and stable coins and
right.
Ether. Maybe I think I agree from the point of view of the stable coins for sure. They're going to become the new kind of payment infrastructure. But the blockchain itself as Rails for the future. There's space for something that is decentralized and censorship resistant, like Bitcoin and some other, some of the other, cryptocurrencies. They are kind of in a different category, don't you think?
Yeah, I agree.
Yeah, because maybe what we need in the future is kind of like the ability to have censorship resistant kind of assets, but at the same time having the rails for all of it to coexist in the same kind of infrastructure.
Yeah, I agree. That's the problem. Is like essentially for USDC, like, it's great. These stablecoins are fantastic, but at the same time, at any moment in time, the accounts can be frozen, right? So it's still like it's more various reasons. Like maybe you're on the wrong political party, or maybe it depends. Like in China, for instance, maybe you have a bad social credit score, so they're not going to allow you to utilize. Eventually, when everything becomes crypto friendly, like on the state level in China, they're going to essentially take away your access to utilize stablecoins because the fact that you voted somewhere, you have a different, a lower social credit score. So in that sense, you'll be interacting with your whole systems and your account just gets frozen for no reason, not even in a malicious manner, not for bad activities, just because of societal structures that are compounded. So that's, also converging everything that comes together. That's why we originally got into crypto, to combat that. And now when we see the linkage of the traditional financial system, crypto coming together, that's the main thing we need to focus on, is that people can use that in an efficient manner. So if they are giving up a little bit more privacy to have efficiency and to use these things, we need to make sure that it runs correctly. So, and to your point, that's exactly correct. We need to make sure that, if we're utilizing stablecoins, it has to be done in a way in which your account just can't get frozen at any time. So if they were to utilize, a system on the Rails network, a private blockchain from each individual bank that onboards, or however you decide in the future to set it up, I think it's a genius way to have access to it. We can install a bridge in our system, so you can take, say you have 10 different banks, each bank has their own blockchain, right? Each bank has their own stablecoin that they have created. We can have a system where they can deposit it, and we can swap it to USDC for the purposes of the vault, but also we can make an integration where we can take their stablecoins and we can swap it to dollars and deploy it to our opportunities. It's something we can work on in the future, and I think it's incredible. And then essentially every entity that onboards to Rails that then has access to the yield opportunities, it can be done on its own rail per se, right? So like if there's a bank in Brazil that wants to deposit and they have their own blockchain with their own stablecoin, well, that stablecoin will go all the way to the end yield opportunity, right? That yield opportunity, I'll swap it to dollars, give it to that opportunity, and that opportunity then will return the US dollars, and I'll swap it back into that native rail chain of that bank and then distribute to them. So there's no issues in terms of, okay, that account will get frozen, or is it a stablecoin that's controlled by by USDC or USDT or something that has a risk to it. So that's how I would kind of see that in the future.
Yeah. And Alex, one question, and again, maybe some of the people on the call are not familiar with the way the ERC 7540 works and what the guarantees, the security and the elements, because again, I've been using lending pools, votes in many different ways, so I'm very familiar with. But maybe if you could tell a little bit about the journey and how users could interact with the district votes and see the opportunities to allocate capital, and then once the capital is allocated, how is effective this works? What I receive in exchange for my allocation of capital. So I know there's elements, but if you could kind of create the journey so people are familiar with what you're building.
Sure. Yeah. So the ERC 7540, they're asynchronous redemption vaults. So you have to request a redemption or a withdrawal request. So essentially, you will deposit capital, and the second you deposit capital, it will mint a district token. So you put $100 of USDC, and then you'll receive $100 of the district token. So then you hold that token, and then that token represents your interest in your principal plus your interest in the vault. Okay. So then let's say over the year, the capital is deployed to the opportunity. The opportunity makes, say, 10% interest, right? 10% interest is on a monthly basis is then given back to the vault, and that price per token share will slowly increase, right? So then at the end of the 12-month term loan, the user, the depositor, can request a withdrawal in the 75/40 structure, and it'll come into a queue, and then based upon like liquidity of the vault, we can redeem that withdrawal request. And then when that withdrawal request is redeemed, essentially what will happen is the principal plus the yield it'll calculate it to say you put in $10, your initial deposit, plus your 12 months worth of yield, and it'll combine it together and then distribute it. So now your token will be worth 1.1 per token, your price per token share, essentially. So that's how it works. So the token is essentially a placeholder for your principal plus your yield. And then whenever you withdraw, the vault will automatically combine the yield and principal together and give it to the user. In the future, we're working on I would love to have a system where users could receive, like their principal could stay in the vault and the yield could just come to their wallet directly on a monthly basis. I have thought many different options about this in terms of maybe we like airdrop it to users, but it's very costly from a gas perspective because we're going to be on mainnet. And I was looking at some other alternative solutions, and the industry is not quite there yet, but we're working with Centrifuge to come up with some viable solutions in the near future to make that possible. But as of right now, when you do a withdrawal request, it will be the aggregate of your principal and your yield. And then in the future, like I said, I'd like to have it so your principal can just stay in the vault, and then you can just get monthly returns right to your wallet. So I think it's
and just when I allocate into a specific vault, let's say it's a project A vault, and I receive the district tokens, can I use these district tokens for something else?
Yeah, so in the future, we're going to have like Morpho trading pairs. We're going to be able to utilize them as collateral. You can borrow against them. But for the sole purposes of when we're launching right now, the product is super simple. We're just focusing on finding the yield, generating the yield, bringing it back on chain, and then distributing it back to the depositors. And then definitely in the roadmap for the future, we want to make trading pairs, have your token be able to be utilized for collateral purposes. A lot of people love looping strategies and whatnot. But for the purposes of our launch, I want to keep everything extremely fundamental, extremely simple, and deliver exactly what we say we're going to deliver, and keep it as such. Because for the purposes of having a token as collateral, we have to involve a market maker, and there's token issues in terms of price per token. If it would kind of act like a discount to bond premium, so I can see a couple of issues that would happen that we would need to work around, and that's something we need to work on in the future. But as of right now, keep it super simple. Stable coins come into the vault, swap it to dollars go right to the business does what it needs to do to churn the yield comes back to the vault, and it's distributed back to the user. And then you can build on it later.
No, and I quite like the evolution of the program, because I would love to receive a monthly income, because it would become a passive, investment where I just receiving every month an income from the investment. That's really good.
So if I may say, the whole premise of this started, I've been managing crypto I had small fund for a while as well, and I'm always looking for products and things to invest in, and I never knew the underlying assets. Most of the vaults, or all the vaults mostly, are 4626 vaults, and when you look into the vaults, it's like, who is borrowing my money, and like what is, it'll show you the wallet address of the borrower, but I wanted to get down to like, okay, who is actually utilizing this capital? How is the yield being churned? Like, where is my yield coming from? Like, whether it's Maple or Morpho or Aave, or like, sure, lending is something you can trace on chain, but when everybody says RWA on chain and you look into their vaults, you don't know where the money's actually going. And I would always feel uncomfortable investing into things, and that's how this idea came to be, because I was like, I'm just going to build it for myself, and I'm going to just show people their money comes in the vault. This is exactly where it goes to. This is the company it's being sent to. It's not a tokenized fund. It's not a fund that then gives its shares out, that then that fund goes in the world and has a whole portfolio of funds. These are the actual deals that the capital is going to. Nobody has done that before. So
Yeah, that's really cool. And when it's again, obviously we're super excited about this, and when you're expecting to launch and to go live and to have the same like projects to be financed, is there an expectation?
Yeah, so we have, like I said, we're working with quite a large syndicate. So we have quite a large portfolio already of deals that are just on a rotating basis. I would say by next week we're going to be doing a soft launch for testing purposes. We have Spearbit, a bunch of different auditors coming in. Like I said, Centrifuge is building all the tech for us. They are launching the vault for us. Hopefully, I would say in about a week or so, everything should be fine for the soft launch. And then to be comfortable, I'd say in about 3 weeks or so, we'll be ready to intake capital. So one of our partners is launching at Korean Blockchain Week in Seoul. So I'll be in Seoul for Korean Blockchain Week, and then I'll be over at Token 2049 again over in Singapore as well. I wanted to match up the launch there as well, so we can do a partnership. So.
Yeah, no, that's cool. Let's do something. We're gonna be at the Korean Blockchain Week. Most likely, we're gonna do a side event. So let's get some beers there and enjoy the moment.
Sounds good.
Also,
from Dubai to Cannes to Singapore. So
exactly. Those events are keeping us busy all the time, and so launch coming soon. Then some syndicates. If you again, everything, a paper accepts every projection, but if you look at the year ahead, what's your view on the future in terms of total assets under a TVL or metrics that you are pursuing to say, hey, if we reach that, I would be very, very happy with the business?
Yeah, so right now I'm talking to a lot of like family offices and a lot of traders who are either putting like Bitcoin or Ethereum up as collateral, and then it all depends on borrow rate, right? So they're putting Bitcoin up or Ethereum up as collateral, borrowing against that, anywhere from 4 to 6% for their stablecoin borrows against that, and then they're taking those stables and putting it into our platform. So that plays a big role. And then I would say I would be really happy if we could get 50 million in here by the end of the year. And then, we have targets with some big institutions that I'm working with, especially over in the Middle East as well, to allocate capital. And, I have a nice roadmap of, a couple $100 million in TVL would be fantastic. Our partnership with Superform, they will be making also like an RWA vault. And we want to make it something similar to how like Plume does Nest. And I don't know if you guys are familiar with the Nest vault on Plume. It's like an aggregate of multiple different RWA vaults. And I think that's where this product fits best in the world. So adoption TVL will all come from, I think, a lot of like hedged vaults. Like you take the district vault and you'll combine it with like short-term T-bills. You'll combine it with a Morpho vault. You'll combine it with, some other RWA vault that whatever partnership platforms decide would be good integration with it. And I think that makes a big difference as well. I know you guys are built on Arbitrum, and we could also launch on another blockchain as well in the future. Right now, like I said, we're on mainnet, but open to other opportunities. And I think a lot of TVL will flow in with that, especially when people are looking for diversified yield on those different chains. So I think the TVL projection, I would love to get 50 by the end of the year, and then just keep building it as best as I can. And I just want to deliver the yield to the users, and then the product will speak for itself. So,
no, I think it's quite doable, 50 mil, and I like the idea of combining part of the vault as real world assets and part with like T-bills, especially if you need some, to provide liquidity for whatever reason. People could withdraw. Obviously, you reduce the size, reducing the return though. But I think it's a very interesting strategy for especially for distribution purpose, to getting to the masses, right?
Right. So that's like what my vision was. So we're targeting around 13% for our vault, because our loans are all senior secured lending. They're all first position, and they they're anywhere from like 11 to like 15%. I don't want to go above that, because then especially in the US, the deals get very, like too risky for a default rate perspective. And so that's kind of our sweet spot that has worked very well. And it's, you know, I don't want to go higher than that. So if you need more liquidity, say you have, you know, another vault that you want to combine with it, like sure, the APY would go down to maybe, you know, 9% or 10%, but you can combine it. You know, our product is like a very high yield, good, you know, I would say it's a medium yield product. You know, you can go Pendo or Athena and get, you know, you can loop it and get into 20, 30% returns, but you know, it's a little risky. But you take a 14% vault, that's, I would say it's a medium rate with pretty low risk, and you can combine it with another vault to get a lower APY, and then you have more liquidity. So it's kind of whatever the user feels comfortable with. It's the appetite of the depositor. If they're looking for more liquidity, if they're looking for higher yield, however you want to blend it. So my job is just to create the core product, and then everybody can utilize that product and integrate it into the ecosystems as they see fit, depending on what their user base needs in terms of their wants. So.
Yeah, no, super exciting. Yeah, we, you know, I think more we think about it, especially coming from coming from a TradFi and seeing such infrastructure being built and allowing people, the borrowers, the people that need money, having a broader access to money. People that want to allocate money have a broader access to opportunities and investment to remunerate their money. It's kind of a perfect match, you know, and. I see in the future, obviously there are risks involved, as you mentioned. You know, if you go to a 25% APY, there is much more risk, right? Versus a 10, 12. And people who need to, you know, study those allocations and get the perception of the risk, because there's no free lunch, guys. We're not promoting investments without the risk disclosure, right? You see, but the way I see it, imagine in the future, you would have a broad range of you know, assets to allocate money to. If you are a business person, you would have more access to capital. And again, it's that's how you know. I remember going back to 2015-16 when the ICOs kicked in the crypto markets, and Alex can mention. Alex built the CoinSchedule back there, was the largest ICO portal. But to me, when I saw that happening, thousands of ICOs being launched and people raising effectively money. And not necessarily all the ICOs were good back there, but you know, the technology showed to work because you had a token that was distributed globally to millions of people, and the people that were selling and raised money in the light of speed, you know, and the speed of light, and then all of a sudden, you know, this now is becoming more institutional, right? It's becoming more professional, more secure. You know, investments being created, you know, so it's kind of it's a very new infrastructure and way to think about bringing together the companies and entrepreneurs that needs money with the people that wants to allocate money more freely. And again, super exciting.
Yeah, it's safe, it's efficient, and it's transparent. So that's what I was going for.
And Alex, I had a question about. So you mentioned it's only available to US citizens. Is that right?
No, it's not. So it's the product it's non-KYC for non-US users, and so I'm not. It's a product that's it's going to be available for everybody outside the US. So
the assets will be US, right?
Correct. The borrowers are all US assets. And the capital will flow from everywhere outside of the US.
Very cool.
Yeah, that's cool. And for people that want to follow and want to look to allocate capital, so how they could follow you on the social media? Well, we're going to publish here, but you're going to have a portal where people can connect their wallets, transfer the tokens. How does it work?
Yeah, so it'll just be directly on our website, just district.capital, and then our Twitter is district_RWA. And yeah, you'll be able to just connect your wallet right on the website and link to the vault itself. So when we start, there'll be one vault, and then we'll add additional vaults in the future for specific niche RWAs. But yeah, it's super simple. Yeah, just right on the website, we'll have direct integration, and then we'll have a partnership set up with a couple of other different like vault aggregators And whether we're in the talks with Plume right now, we're talking with Superform to be like a piece of their integrated vault system. So like I mentioned before, they'll have their RWA vault, and then we'll be one of the inputs into their vault. So different ecosystem integrations.
Yeah, guys, I think we're getting to the end. It was really a pleasure to be here, Alex, with you and Alex from Rayls. To the community, thank you for joining. I think this will be on our socials, so people that were not able to watch later. But keep posted. I think there are much more to come. We're very, very excited about these opportunities. And again, I think people that are building, we need to bring here and show the case. I think District will be a tremendous success. Congratulations, Alex. And
thank you very much.
We're super excited about it.
Yeah, very happy to have your guys' support, and I'm very excited about the partnership moving forward. And I think we can do some incredible things in this space. We put our minds together, and anything is possible. So
that's true.
Yeah.
Thank you all.